Malaysia is a geopolitically and economically important country. It is member of strategically important multilateral economic unions like Asia-Pacific Economic Cooperation, and Association of Southeast Asian Nations. Currently, Malaysia is a newly industrialized middle-income status country having a population of over 32 million with a gross domestic product of $415 billion. It is not very strange to say that Malaysia has its mark on the global world. With exports standing at $263 billion and imports at $197 billion, the export orientation of the Malaysian economy is vividly realized. Malaysia has China, Singapore, United States, and Japan as its major trading partners. A lesser-known fact about Malaysia is that Kuala Lumpur is the national capital, largest city and the seat of the legislative branch of the federal government, whereas the nearby planned capital of Putrajaya is the administrative capital, which represents the seat of both the executive branch cabinet, federal ministries and agencies, and the judicial branch of the federal government. At the time of its independence from the mighty British Empire, Malaysia was merely just a commodity exporter, having tin and rubber as the most they could offer. The Malaysian infrastructure like roads and ports were only capable of these low-end commodity exports. In 1960s, over 90% of the exports of Malaysia were either agricultural products or mining commodities. To make its way to the developed economies, Malaysia launched a new economic policy which aimed at reducing the social tensions between ethnic Malay and immigrant communities from China and India, which make up a quarter of population today, through offering more economic opportunities. As Malaysia is now exporting semiconductors, chemicals, machinery, and vehicles, we have already witnessed the birth of a behemoth in the manufacturing industry. Over the last 20 years, the Malaysian GDP per capita has tripled. But how did they do that? The government after independence focused on making its way out of the small commodity export market. Often agriculture industry generates lower wages and offers less economic development, hence nations choose to replace it for the more lucrative manufacturing industry. This is exactly what the federal constitutional monarchy of Malaysia did. The government introduced export-orientated policies and removed the barriers to imports like quotas and hefty tariffs in order to allow the purchase of sophisticated machinery for production of capital goods. Malaysia was learning from the success of their Asian counterparts like Japan and South Korea, who had managed to develop their economies based on state-led development model. As a result, the government started to focus on state-owned industries. Malaysia became the first Muslim country in the world to manufacture vehicles. In the 1980s, then Deputy Prime Minister of Malaysia Dr. Mahathir Mohamad set up a state-owned car manufacturing firm named Proton, under a joint venture with the Japanese multinational Mitsubishi Corporation. Many such companies were set up that, benefiting from state protection, transformed themselves into enormous conglomerates employing tens of thousands of people and owning hundreds of subsidiaries. By the 90s, the government realized that these state-owned enterprises might be beneficial to display the industrial prowess of the country, but in the long run they will not be able to become competitive without the state protection umbrella. With this idea in mind, the government started to privatize the state-owned enterprises, and with the gains of privatization, Malaysia set up the country's very own sovereign wealth fund, which is now the 35th largest in the world. An unavoidably important phase of Malaysia's economy was the 1997 Asian financial crisis, which started in Thailand over speculations that Thai baht was overvalued. This crashed the Malaysian currency called ringgit as the central bank ran out of its reserves to protect the falling currency. The stock market lost half of its value, which led the country from a 10% growth in 1996 to a 7% decrease in 1998. But here Malaysia stood out from other Asian economies, being one of the few that did not receive an IMF bailout, unlike Indonesia or South Korea, because it was very strong when the crisis hit. With this, the country avoided the harsh conditions that came with an IMF bailout package. Unlike others, Malaysia put its bets on fiscal spending in order to make its way out of the crisis. The government implemented capital controls to prevent the money from leaving the economy and pegged the currency against the United States dollar at an undervalued rate. By this, the country stopped huge capital outflows and made its exports more price competitive. Post-Asian financial crisis era, the Malaysian economy has shown solid economic growth but not enough to enter the high-income status. This shows that the country is stuck in the middle-income trap. This trap is notoriously difficult to overcome, as shown by the Malaysian economy embattling it since decades. So what's the problem? Productivity growth is the major issue here. A middle-income trap is a representation of slowed productivity and negligible innovative attitude. The productivity of Malaysia was lower than the likes of countries which have exited the middle-income trap in past, for example Taiwan. The research and development spending of Malaysia is also low, standing at 1.4% of the GDP, whereas the neighboring Singapore, which is much smaller as well, spends almost 2.1% of its GDP on research and innovation. The country is at 126th position in the world on the rankings for ease of starting a business. Like many other counterpart Asian economies, the country has seen a fair share corruption scandals like the 1MDB, for which we'll be making another video. However, the country has a bright future ahead of it. Now the government is yearning to expand its local industries and empower the local businesses with market-friendly conditions. The country also aims to diversify its economy by enlarging its service sector, which has a lot of potential. Overall, the country has come a long way, developing from being a small commodity exporter to manufacturing giant, rightly placed near the strategic Strait of Malacca. Yet the nation is badly stuck in the middle-income trap since decades due to declining productivity and low innovation. However, the country is predicted to achieve the esteemed high-income status in this decade. I hope that you enjoyed this video on the economy of Malaysia. We covered many important phases of the Malaysian economy, including its transition to a low-income country to being stuck as a middle-income one. We will be making videos like this for other countries as well. Please comment about the country you'll like to hear about next. Till then, goodbye.